Because I'm telling you, these countries are calling us up, kissing my ass. They are dying to make a deal. Please, sir, make a deal. I'll do anything. I'll do anything, sir.
I'll tell you one country that is certainly not ringing you up and kissing your ass, and that, of course, is China. Now, we've got news out of China breaking today in regards to the fact that they've upped their tariffs to 85% on American goods. So what we have is the escalation of the largest economy in the world, second largest exporter, first largest importer, and the second largest economy in the world, largest exporter, second largest importer, essentially now in a tariff trade war that will, if not resolved, have potentially devastating effects for the economy on all fronts. And really what this is inducing is uncertainty that the markets, of course, aren't liking. I also have to say, and this is coming from somebody that said, okay, look, tariffs, on the face of it, could end up with lower tariffs across the board. And we're seeing that with certain nations. A lot of nations, in fact. You know, there's 70 plus countries that have now, or are actively now engaged in talks in regards to negotiating this stuff. China, however, isn't. Despite me saying, okay, there could be a silver lining in all of this and actually being more for Trump than against, certainly in regards to his opposition, I must say I'm not the biggest fan of his approach there to this whole situation. What is a very sensitive situation, and actually sometimes you need to be tough. Of course, you need to be tough in these negotiations and situations, but there's perhaps more of a diplomatic way of going about things rather than mockery. In a very tense situation, and the US bond market, which is what we're going to be talking about today quite a bit, is now in jeopardy, and actually this is only going to discourage any kind of easing from a federal point of view. What's taking place right now is essentially a multi-paradigm situation where there are multiple serious factors at play that are going to or could tip things in one direction. I'm still ever the optimist. Certainly when it comes to the cryptocurrency space, I truly believe this market, the cryptocurrency markets, are going to offer a once-in-a-lifetime opportunity. And that hasn't changed in the slightest, despite everything going on elsewhere. We'll look at Bitcoin's buoyancy according to BlackRock in these kind of geopolitical situations. But this, of course, is the news out of China. China slaps reciprocal or retaliatory tariffs of 84% on US goods in response to Trump. This is coming into effect tomorrow, the 10th of April. Now, the effects on China are, or started yesterday. They say they raised about $2 billion in regards to tariffs so far. There's lots of kind of rifts coming off of the back end of this, like, you know, manufacturing being onshored in America. Well, how does that work? Can you really envision, or do Americans even want to be factory workers? I would say that people are perhaps not looking at the fact that what you'll probably end up with in regards to manufacturing in America is more smart factories where machines do a lot of the labor and not actually human beings like what you potentially have in China. That is a whole nother and separate thing that we can talk about at another day. But really, what I wanted to do to kick things off is just give you an update on the situation. We've outlined two scenarios. The scenario I'm more in favor for, of course, is that these tariffs lead to negotiations and lower tariffs across the board. Basically, zero tariff, sort of more free trade zones, which I'm all for. The other scenario, which is the bearish one, is that these lead to escalation. And right now, despite having over 70 countries that are looking to engage in negotiations, the largest or second largest and largest economy in the world are at heads and escalating tariffs, which essentially on the face of things will have negative repercussions, at least in the short to medium term. So a lot going on. This really is a ninth dimensional game of chess, but if anybody can work all this out, we can. And, I think if you're a net buyer of cryptos, you've still got this amazingly bright future ahead of you. And with this kind of reshuffling that's taking place, there's always opportunities to come out of things. Let's talk about what's happening in the bond market, because this is interesting. And we're going to link this to perhaps BlackRock's foresight in regards to a shaking up of the 60-40 portfolio, which has been traditionally implemented by asset managers, which is 60% equities, 40% bonds, because if you have a downturn like what we're currently having, typically bonds will float you. And of course, they yield bearing. There's a number of reasons why, but they're kind of a hedge against downside risk for equities or risk off scenarios. They're a risk on scenario or risk-off scenario hedge. And what we're seeing is actually the deflating of both of these, all obviously on the back end of tariffs. And actually this is pushing yields up, which essentially is not going to encourage the Fed to lower interest rates, which is counterintuitive to what the United States is trying to do. Now, there's a stablecoin element to all of this and the bond market more broadly. Again, another paradigm that we can explore at another date. But on the surface of things, the US tariffs trigger bond market turmoil. We'll just read you sort of Twitter's TLDR. The United States has implemented a series of tariffs on various countries, including a 104% tariff on China, which went into effect on April the 9th, 2025. So yesterday, we had about $2 billion come out of that. Following the imposition of these tariffs, there has been significant increases in US Treasury yields, with the 10-year yield reaching 4.5% and the 30-year yield hitting 5%. Some market analysts speculate that the rise in yields may be due to China selling US Treasuries, very likely, as a retaliatory measure. Through this has not been confirmed. There has been some confirmation. The bond market has experienced what some describe as a disorderly liquidation and meltdown in response to the developments. And there's lots of takes on this. Lynn Alden giving her take. Tap Mike, clears throat. Nothing stops this train. This is, how is this not objectively disastrous development for Scott Bessent? An unnerving development is starting to unfold as President Trump's trade war hammers financial markets. US Treasuries, far from offering shelter from the turmoil, which they've historically done. This has been the typical portfolio split. It's very interesting. Post all of this, who is suggesting a reshuffling of this portfolio split because of potentially different factors. We're also going to talk about Bitcoin's role in a risk-off environment and also look at its buoyancy in regards to geopolitical events. I'm starting to think BlackRock have got a great foresight in regards to all of this, and actually them enabling a Bitcoin ETF, I think couldn't be better timed in regards to everything taking place. And that does beg the question, well, how does Bitcoin fare in all of this? Well, I would say in a recession, it's correlated. If we do enter that and there is further escalation of everything and not a resolve to things, importantly, essentially, you know, my base case would be Bitcoin goes down with everything, but actually there is a case where its buoyancy may really allow it to shine as a non-political, it's political in its own right, it's almost like its own party, but in a kind of, it's not attached to any location, it's global. How does all this fare? We've got a lot to get into, but let us continue. Far from offering shelter and turmoil, are suddenly losing their haven appeal. Again, why 60-40 portfolio split has been historically implied. For James Athey, it's bringing back memories of the basis trade unwind at the onset of the pandemic, when widespread deleverage sparking blow-ups of the popular hedge fund strategy and sent bonds into turmoil. While there's little concrete evidence of dealers cutting off financing or hedge funds getting caught wrong-footed thus far, he can't shake the feeling that recent moves are just a test or just a taste of the hidden risk lurking beneath the surface of the markets. It looks like March 2020 when we got these wild moves, possibly relating to the basis trade, said the portfolio manager at Walborough Investment Management. Last week, we had not seen any signs of hedge funds getting stopped out on the bond futures basis, but suddenly we're seeing yields spike. And yields are spiking. This is the 10-year. We were looking for downside on the 10-year. We got it right from this smaller head and shoulders. It made our target perfectly. And then we were looking at a broader head and shoulders and more contagion. When do you see weekly candles like this on the bond market? It's a sign of something going wrong. And this is the yields. So the flip side to this would be TLT, which Stan Druckenmiller is short. And that, you know, kind of made me think, well, actually, you can't be short. I mean, look at this, where this is supposed to open today. You kind of can't be short bonds if you're expecting a recession, because bonds have typically kept you afloat in a recession. What we're talking about right now is quite high-level economic stuff. Hopefully, we're making sense of it and putting it as layman as possible. But Stan Druckenmiller being short bonds means that he wasn't, in my opinion, expecting a risk-off environment. But what we've got is potentially a risk-off environment due to things, and cascade into that again if there isn't a resolve to all of this and further escalation, and we're seeing that from the two largest economies in the world. And actually, at the same time, that's actually hurting due to the nature of what's causing this, the bond market, which means where's your safe haven? Could Bitcoin do well in all of this, and have BlackRock had the foresight for it all? We can maybe explore that. I won't go too much into that because that could be for a video itself. But what we're seeing is the bond market getting hammered on the back end of this, and what you'd expect is when the stock market goes down for bonds essentially to go up, or when you're in a risk-off environment for bonds to do well. And the opposite is taking place right now, which is quite a stalemate. This could explain, again, talking about multiple paradigms, why gold has just gone on and started to make all our targets. We've had multiple targets for gold. One's been hit, two's been hit. We've got that third one at 3,500. How's crypto going to fare in all of this? All questions to ask and answer. It's very interesting that recently, talking about sort of portfolio splits and things like this, and bonds, that in Larry Fink's letter to investors, he essentially highlighted from 60-40, 60% equities, 40% bonds, which has historically been the case, to 50-30-20. This beauty, or the beauty of investing in private markets, isn't about owning a particular bridge, tunnel, or mid-sized company. It's how these assets complement your stocks and bond diversification. Diversification has been called the only free lunch. And this is where alpha, the saying alpha, comes from for anybody who's familiar or unfamiliar with financial terminology. It was the motivating idea that led Nobel Prize-winning economists like Harry and Bill Sharpe to develop modern portfolio theory, which became the foundation for the standard portfolio of roughly 60% stocks and 40% bonds. Generations of investors have done well following this approach, owning a mix of the entire market rather than individual securities. But as the global financial system continues to evolve, the classic 60-40 portfolio may no longer fully represent true diversification. And they did highlight Bitcoin in this article specifically. More importantly, blockchain and the role that it's going to play. You can see here, this is them saying, can Bitcoin eat its way for the US dollar reserve status? Talks about tokenization and the SWIFT system being outdated and how blockchain is going to enable all of this. Every stock bond, every fund, every asset can be tokenized. And it's interesting that BlackRock recently, or not that long ago, published a report where they essentially spoke about Bitcoin being a unique diversifier. And they're now talking about a 20% allocation into unique diversifiers. On the back end of this kind of conundrum, we are literally seeing what he was saying in regards to the 60-40 split potentially not being a lifeboat, and that there's the need for a new asset class to come into play. I'm going quite deep with all of this. You can imagine the kind of thoughts that I'm having trying to work all of this out. But it says here, an uncorrelated asset, Bitcoin reflects little fundamental exposure to other macro variables, explaining its low long-term average correlation. This is from BlackRock, by the way, with equities and other risk assets. While there have been brief periods where Bitcoin has seen its correlation spike, particularly around episodes of sudden shifts in US dollar real interest rates or liquidity, these episodes have been short-term in nature and have failed to produce a clear long-term statistically significant correlation between relationships. So they're putting forward the argument that Bitcoin actually could be a risk-off asset. And actually in times of geopolitical events, you can see how well Bitcoin does in terms of buoyancy. It's the thing to buy, essentially, around uncertainty and geopolitical events and kind of shocks. The Bitcoin chart, I don't know how crypto's really going to do today. It's a deer in the headlight crypto, unfortunately. It's really going to be all about the US stock market and how that fares. There needs to be a resolve to all of this. You get resolved to all of this, you're going to see a recovery. You get escalation and continued uncertainty, which the bond market has now just introduced another sort of measure for. You know, you can absolutely see continuation here. What essentially I'm looking for this week is real strength to come in and some sort of resolve, at least in the next coming weeks. Crypto's just caught in the headlines. I still don't think that Bitcoin, this of course is Bitcoin dominance, looks particularly bad, to be honest. And I do think we'll see a recovery and continuation. There is other news that World Liberty Finance, which is sort of hosted by Trump's family, is starting to sell their Ethereum. They only sold $8 million worth. Remember, they purchased $210 million, but why they're doing that, I'm unsure. There could be a reason behind it. And of course, today, I believe you've got... No, it's not CPIs today, is it? When is CPI coming out? CPI might be tomorrow. Or is it Friday? You've got CPI coming out this week, which is going to give a little... Yeah, you've got CPIs coming out this week, which is going to give a little bit more clarity. So, a lot going on. There's also another roundtable, I believe, that we'll be streaming on Friday. Hopefully, we made sense of what's quite a complex issue and situation. There's two paths ahead, right? There's escalation and literal implementation, which China is essentially... That's the China and Trump right now. Or there's what a lot of other countries are doing over 70, which is coming and negotiating, and that may result in lower tariffs across the board. So there's resolution or there's, conflict. Either those two scenarios on the macro are going to play out, and there's going to be massive ramifications for markets more broadly. Certainly we're seeing that in the bond market thus far, which kind of shakes up the entire thesis of investing that's been in play for the last 40 years. And it's interesting that you've got Bitcoin coming around as a new asset class and kind of nudging its way into all of this, and crypto more broadly. A lot of questions that we can ask. We don't have all the answers, but we'll certainly try and coach you guys through this as easy and as disorderly as possible. We're still bullish on the cryptocurrency space, guys. And on that note, I'm going to love and leave you. Thanks, everyone, for watching, and I'll see you all in the next one.